Hi, everyone. Welcome to Analyze Your Trade, episode number 33 for May 8th, 2018. Tonight, we will be discussing your trade ideas. So over the last few days, about 40 people submitted up to 5 symbols each, and I've put the list together, which you should see on your screen right now while I'm talking. And that's the symbols we're going to discuss today. My name is David Kosmeter. I'm the creator of Timing Research, and I developed the show with Dean Jenkins of Follow Me Trades, and he is here to moderate today. So I'm going to go ahead and turn it over to him.
All right. Hey, thanks, David. It's good to be here. Show number 33. Yeah, and we're coming up on a year that we've been doing this. It's pretty cool. And welcome, traders. Glad to have you here. And I hope we're able to go through with the panel here and take a look at the trades you're interested in and give you some good information. We got a good list of stocks, household names. But before we get into the charts, which we will really quickly, let's go ahead and introduce the panel that we've got here today. And we're going to start off with Larry. Larry, if you take a minute or two and just explain, who you are and your approach to trading.
Yeah, well, thanks for having me here again, Dean and David. Appreciate it. Look forward to it. I like looking at trades like this. It's a lot of fun. Yeah, so I've been actively trading for over 30 years. Started my career out trading foreign crude oil, and went on to run a really large international trading desk for a large oil trading company for over 10 years. And then started my own company, Power Cycle Trading, which is a trading educational service. So you can check me out at Power Cycle Trading. And what we do is we basically are directional traders. I've got a lot of different trading models that I've designed, and then we use options to trade the various setups that we're looking at. So I like to use options for really good leverage and controlled risk, and that's kind of my passion: direction and options. So that's what we do.
Direction and options. We got a lot of that. We got a lot in common, Larry.
Yeah.
I think our analyses end up being pretty close most of the time.
Yeah, we're very close. That's right.
Yeah. All right. We got two Stevens on the panel. So we'll go by Stephen B and Stephen P. And Stephen B, if you would take a minute and let folks know who you are and what your approach to the markets is.
Sure. Yeah, thank you. And thanks for having me. Every time I kind of come on the show, I really enjoy it, and I actually learn a lot. So I'm interested in learning what the rest of the panel has to say. So I'm Stephen Brooks. I've been a self-directed investor for over a decade now. Before that, in a former life, I was a professional baseball player. Now I'm an investor and a trader. Over the last couple of years, I've started to try to teach people and help them navigate their ways through the financial markets using simple, basic methods that anyone can really visually see on a chart or on their screen, and hopefully simplify the whole stock market thing for them.
All right. Hey, glad to have you here. And everybody here's got something something cool about their background, but professional baseball player, that's a different level of cool, man. Stephen P, if you'd introduce yourself.
All right. Hey, everyone. My name is Stephen Place. I'm the founder and head trader at Investing with Options. And my goal with my clients is to find the best risk relative to the reward and odds that you can get. So we use a lot of income-based strategies, directional income, non-directional income. Every once in a while, we have a convexity trade, straight up calls, straight up puts as well. I also have a sports background. I was third place runner-up in a collegiate flag football team on a national level. So kind of a big deal here too. So thanks for having me. Appreciate it, and look forward to this.
All right. Hey, good to have you here. National level flag football. See, that's cool. Yeah. All right. And I won a racquetball game with my buddy one time. So I'm in the league, right? Maybe not. Okay, I'm Dean Jenkins, founder of FollowMeTrades.com. I'm a technical trader. I came over to the light after about 10 years of trying to do fundamental trading and got completely frustrated. And now I am passionately all about the charts and the chart setups. And I run a FollowMeTrades.com. It's a stock trading and option trading advisory service. I call out the picks that I'm making in my own account with my own money. And I also have a live trading room in the mornings, and I offer mentoring and some training courses for my trading methods. All right, let's jump in. We got a good list here. And I think first up is Adobe, and we're just going to keep that same batting order, the same lineup, no pun intended. And let's go ahead and start with you, Larry. We're going to look at Adobe first.
Yeah, I like the looks here of Adobe. We actually had this on an alert that we gave out Friday to go long. So this is one stock that I do like quite a bit. So you can see it's pushed back up here to the top of the range. What I really like to look at is once you clear that 618 and you hold, then it really kind of gives you, potential to break out from the prior highs and then extend on up. So it looks good. It's good breakout. Looking for a target up here to this extension, about 238, and then take some profit there, and then maybe potentially 245. But I do like Adobe ADBE quite a bit. Looks real good.
All right. So we got one thumbs up on Adobe for Larry. Stephen B., what do you think there, man?
Can you guys see my screen?
Yes.
Okay, so I feel pretty good about Adobe. My only thing is that it's already gone up through that 52-week high. It's up about 8% in the last 10 trading days. So while I'm bullish on Adobe, I don't want to kind of chase it and try to get in now. If we can get a little bit of a pullback or a little bit of a sideways, then I would definitely be interested in establishing some sort of a long position. But I wouldn't chase it right this second. I'd wait for something to happen first.
I like your term, chase it, and that'll be part of my thoughts on Adobe. But Stephen Place, where are you at?
Sure. This is a relative strength play. This was the strongest stock in a market that's been, kind of iffy over the past few months. It's breaking out to new all-time highs. This is what I would consider a compression breakout. And what's important here is you do have earnings coming up. And one of the things that you have in the options market is as a stock heads into earnings, the implied volatility stays high, which means that option buying isn't a terrible idea right here. Okay, so reflecting what the other two traders have talked about here, if you got in 3 days ago, you're looking good. If you're looking for new entries, it's a little bit tricky because up 4 days in a row, like the other Steve said, I've got this rolling returns indicator up 8% in 10 days. I think that you can, dip a toe in the water. If we pull back, then you add to the trade, and then you run a stop sub 220. So this is the trade I like. Buying the June 240 call at $6.80, added $1 lower. So you go half size right here. It's, you pay to play a little bit. If it dips, then you average down into your basis. And then the trick here is to sell 1 week before options expiration, before earnings. That way you can profit from any implied volatility bumps. And the implied volatility bump also helps to reduce the risk in the overall trade.
All right. That's a pretty unique approach. I kind of like it. I think Stephen Place, you in your introduction talked about reward to risk. That's a huge deal for me. I only take trades that have, good, strong reward to risk ratios. Right? I don't want a trade that can lose more than it could win. That's bad math for me. In terms of Adobe, probably my, I use Elliott wave, and I look for, a new impulsive trend. I can trade a correction. I can trade a continuation of the original trend. What I can't do with my method is join a mature trend. And so many of these I just have to walk away from, because this is a 2-year mature trend. It's been an amazing trend, and it may continue, but it just doesn't meet my criteria. So I do not chase, and I like your term, Stephen B. I don't chase trends once they are this mature. And, who knows? It may double from here, but I don't know, and I don't have an edge in this kind of a trade setup, and I've got to have an edge, probability of the outcome for me to take a trade. So no trade. And, it's a great chart, great trend. It's also an incredibly difficult company to do business with. They make me madder than just about anybody else. If you ever have any kind of subscription account with Adobe, they are mean. But an amazing trend on their chart. Next up, gold. Everybody wants to know about gold, GLD. Yeah, that's for you, Larry.
Okay. Okay. Everybody hear me okay? I think I'm off. Okay. So yeah, with GLD, let's take a look here at gold. You know, right here, you can see that the main thing that I notice here is this big support level right here. You can just see all this price support right there. See where it's come down? It came down here, came down here, came down here, bounced back, came down here, and then it's come down again. So we're into, this is also a 200 period moving average, 200 days. So typical rule of thumb is never short 200 day, you know, the first couple times down. So, you know, the key here is to see, can it hold this 200 day moving average at 123 basically and bounce, which that's probably the higher probability. But if it starts to separate like on a closing basis below this 123, like in here, and you get maybe even a couple of closes here and some more momentum down, this has pretty good ways to fall. So right here, it's kind of a no trade, but this is one to keep a close eye on. And if you start getting closes below this 123, jump on it for a short trade to the downside.
All right. At support. Clear. I got the 200 day on my chart as well. I see the exact same thing. Stephen B, where you at with gold, man?
Yeah, so gold and GLD specifically is and will be for the next few years, hopefully, one of my 2 or 3 core positions. So most of the positions that I have on a daily basis are for a very small subset of my total margin, except something like GLD, and specifically being long GLD, is definitely part of my core position. So any dip in GLD, I would absolutely be putting on more covered calls as to build up a core position. So I don't think this is sold off enough for the position that I currently have to try to get in at these levels. However, if we start to get into the teens, like the 119, 118, which obviously has a ways to go still, I would definitely be adding to my core position and covering my stock with some calls against it for sure. Nothing right now though.
Okay. Wait, but bullish on gold.
Bullish over the long term on gold. Not a great entry for me right now for what I currently have. It's pretty mid range.
Right. Stephen Place.
Sure. Gold is one of those where you'll have moments of brilliance for about 2 weeks, and then it trades like hot garbage for months. So great example. You go back beginning of was that 2016, where it runs from 100 maybe to 115, goes sideways, right? Runs from 115 to 128 and goes sideways. And then you see momentum both to the upside and downside. I do think that the longer term chart definitely supports some kind of a bottoming process. Now, if we go into the short term, you know, basically this year, 124 has been a major level, right? We've tested it we could say 2, 3, 4. This is the 5th test. Every time we've tested this level, it has been rejected. We've seen price rejection and buyers have come in, and we've seen basically strong movement off of that level. And now we have a very scientific term going on here. It's called farting around, right? The trade, the stock, the ETF, gold, is farting around at this price level, which indicates not price rejection, but price acceptance. The longer we hold at 124, the higher the odds that 124 will break, because eventually inventory will run out of buyers. And then in order to find more buyers, price has to auction lower. As we head into the low, 123, 122 area, I think that is a good place to start looking at bull put spreads as a quick fade. So the trade I like here is selling the Joule 120, 117 put spread at 60 cents, scaling in 20-cent increments, and then scaling out at 40-cent increments.
All right. That's an interesting play on it. So my take on gold, I think I agree with, it's obvious, this level that we're looking at here, this, 124-ish level, it's sitting right on top of the 200-day moving average. I can get rid of this the shorter time frame analysis. So I'm with Stephen B. I think long term, gold is bullish. I don't think there's a good entry yet, and it's it's getting on my nerves. You know, in the degree of fear, this CNN Money Fear and Greed Index is kind of a cool thing. I don't trade on it, but it's fun to look at. And we've been in fear and extreme fear for weeks, months, right? Where the Fear and Greed Index has us, you know, indicating the market overall is pretty fearful. And, you know, here we are at the end of a 9-year, you know, or 9 years into a bull market, right? We have a ton of uncertainty. Typically, we would see gold start taking off, and it ain't, right? Which makes me so glad I'm not a fundamental trader. But the technicals are just not here. I think Larry said if it breaks this 200-day at about 123.81 that you would have a short opportunity. Probably right. But you look, the big pattern for a year and a half has been higher highs, higher lows, higher highs, higher lows. So I don't think it could go that deep. It could be a short-term play if it breaks that, because it regularly breaks the 200, by the way. So we got to wait and see. I'm looking for a pretty convincing break, get up above the Ichimoku cloud, and then I think we got the next leg running like these ones that we had at the end of last year and last summer. So we could get another run like that if we get a pretty clear break. But no trade at this moment, but there could be one coming. And then we have Boeing. Boeing Company. All right. Larry, don't sit by a window if you're going to fly anywhere, right?
I'm sorry?
If you're gonna jump on a plane, don't sit by the window.
Oh yeah, true. So Boeing's looking pretty interesting here. It's you know, it had that big sell-off, but it's kind of stabilized here. And what we're seeing is you just run your Fibonacci levels from that high back in February to the lows here in March. You know, we finally got back over the 382. It's kind of trapped in between this 50% retracement to 382. We've got a nice trend line up above, and this thing is kind of coiling, consolidating. So right now, I would do nothing on Boeing, long or short. I'm kind of more looking for this upside to break this trend line, and then you've got that 618. So this is one we've been, you know, watching for quite a while, actually, on Boeing. For my thought is, you know, just based on what I'm seeing off momentum, it's more, you know, potential probability for it to break higher. But I'd wait for this kind of trend line to start breaking here. So like 345, 346. And then we can get potentially above that 618 and maybe take a run back up. But right here, do nothing, right? For me, is, you know, I do nothing trade, but looking more in line for a potential upside move.
All right. I like doing nothing. You know, quite often that is the most profitable trade, is no trade at all if there's not a good setup. Stephen Brooks, you got do nothing on Boeing, or you got something you see there? You there, Stephen B? Might be muted if you're trying to talk.
Yeah, you're
Whoops.
muted. There you go.
Yes, we've been on a tear since the beginning of 2016. We've gone all the way up and up and up with very few sell-offs. Yes, they've been bought, but in terms of a little bit shorter time frame, I kind of look at the 1 year. We're very mid-range. I mean, maybe this breaks to the upside, maybe it breaks to the downside. Who knows? I don't really know. But in terms of a risk reward, I don't see it to either side. So I'm going to sit on my hands on this one.
All right, he's out. And Stephen Place.
Sure. This has been my white whale all through 2017. So every time I look at this stock, I always get a little pissed off. I've tried to short it every once in a while, and it did not work out, as you can tell. So yeah, it's gone sideways the entire year. So market corrections can happen 3 different ways: price through a pullback, time through sideways action, or momentum, where you just see higher highs but at a lower rate of change. Right now, and I went through this stock a bunch of times, I would love to see a pullback to 300 to start selling some put spreads in. I think that there's potentially a setup with some straddles getting long volatility right here, because simply put, we haven't seen the stock move for about a month and a half, and the longer the volatility compresses, the higher the odds of volatility expansion. Problem is, the straddles aren't cheap right now. So it's not the best risk reward. So yes, I'm sitting on my hands. I've been looking at it, looking for ways, looking for reasons. It's just not there right now.
Okay. So everybody so far, 3 for 3 on the sidelines on Boeing, and I'm in that same camp. As noted already, it's in a channel, had an amazing run up. Again, I don't chase mature trends like this, so there's no long trade for me on this one pretty much ever, until it has a pretty substantial correction. I see a short trade if we break down that previous low of 311. If it does that, then we got a retracement, pretty high probability into the Fibonacci retracement zone of the entire move, which is 38.2 to 61.8 Fibonacci retracement. That takes us 277 to 219. So if we can break 311, I see a short play down into this target zone, but we're nowhere close to that at this moment. All right, next up is Chipotle CMG. For a long time, that was the absolute safest place to go eat, right? After 2 pretty substantial infectious disease outbreaks, you got to believe they were inspecting every single burrito, every bean. Nice. They've had some good news lately. What do you think? Good enough for you, Larry?
Yeah, no, I would not be doing anything here on it. It's had that explosive move up here after earnings, caught a lot of shorts, just totally, short covering, huge rally. It's trying to consolidate here. So you could look at that as kind of a bull flag, but you can see how far this thing is pushed to the upside. And for me, the only thing I would look at is if it pulled back here to this 618 retracement right in here, then see if it holds there, consolidates, and look at the lower time frames to see if you get any setups there. But I would not be chasing this up here, and I'd probably be actually starting to look at maybe sell out of the money bear call credit spreads if you can get enough. I hadn't looked at the premium, but that might be something to look at. You've got this 150-week moving average right here. So actually that's something that I do want to look at, is to see if there's any premium where you could sell maybe some credit spreads against this, with the kind of a tight risk reward type setup. So nothing there other than maybe selling some premium if there's any premium to be gained. That's about it.
All right. Doesn't sound like you're that interested. It's not something you're teeing up for tomorrow's open.
No.
All right, Stephen, what do you think about Chipotle?
Yeah, so obviously something happened with their last earnings. I think they were up 30%, 28% on a single day. So that obviously shook out, again, a lot of the shorts. This is very mid-range to me. I will say that this is more of a short candidate for me at higher levels. Maybe once we get a little bit over 450, I'd be interested, just like the previous person said, selling some credit spreads. But as of like tomorrow or the next week, I don't have a dog in this fight.
All right. And Stephen Place.
All right, look, I think that the whole scare with everyone getting sick, there's a conspiracy there, and they talked about it in Billions. If you watch Billions, where they're like they got the juice bar and people getting sick, my conspiracy theory is that it was a bioterrorism attack, and the short sellers caused it. So that's my Alex Jones for the day. All right, I went on my rant. When we see this kind of price action, this is one where I believe that news trumps technicals, where technical analysis is an assumption of market structure, and we assume that the market structure is going to be the same over this whatever period of time, because basically the market structure and the supply and demand is the same. When you have an introduction with new risk or new market participants, it changes the liquidity profile of basically the microstructure of the stock, the bid and the ask, supply and demand, and everything. When you see a strong move like this after earnings, what tends to happen is post-earnings announcement drift, wherein the direction of the stock tends to drift along with the previous momentum, right? So with a huge gap higher and a big run, day one, this is still an in-place stock. This is a classic textbook bull flag setup. Now, if you don't want to chase, if you want to say, okay, I want to play it a little bit more conservatively, The setup I have here is the Joule 375, 370 put spread at 80 cents, scaling in. Basically, the whole setup is the odds of Chipotle within the next month and within the next month and a half, testing the earnings open is very, very low. The odds of that happening is very, very low. So you can align that odds with your risk and reward and start selling some put spreads. Me personally, we've got this 480 level, which was the last proper top in the stock. I think that eventually starts acting as a magnet. What I think will happen is the early shorts will get smoked. So we'll see new highs, and then you'll get those early shorts coming in. You'll see a pullback, embolden those shorts. Maybe they go in a little bit more. And then into that second short cover is, if you do want to look at a short trade, that's where you're going to have to do it. So right now, if you want to, I'm going to bastardize Elliott wave a little bit, but basically, you want to wait for, I guess, the third wave, I suppose, to start looking at some kind of short exposure if you want to do that. But I think it's way too early. I think you got to wait for, something like 30 to 40 points higher to justify starting to put in some, let's just say, bear call spreads or things like that.
All right. So that doesn't sound like you're teeing up an order for tomorrow at the open on this one either.
I think you can sell some put spreads. I think you can get away with it. I think it's pretty good risk reward right here. I think that the odds of Chipotle within the next month and a half testing that earnings open is very low. And so you can align the odds with, an option trade. And I think bull put spreads are a pretty good bet right here.
Okay. For me, this is really the kind of chart that I hate. Because it's chaotic. I like orderly markets, and I use a very simplified version of Elliott wave, and I'm looking for impulsive moves and corrections. And there's some markets that are very predictable and they move in very orderly fashion. Chipotle, it's a marquee stock where people are trading the story as much as they are trading the fundamentals. It's a Tesla. There's people that are passionate followers of the story, and those that are they hate it, and so there's emotion being driven in the short term in all trading, right? That's what Benjamin Graham said. The market is a voting machine in the short term, but on some of these like Chipotle, Tesla, like that, people vote passionately, and it gaps and moves around, and I'm not excited about a market like that. I don't want anything to do with it. So nothing for me. There's better stuff to trade that is just more predictable, more profitable. That's my take on it. Next up, here's one I haven't heard of: Main, M-A-I-N. I always get excited when we see a new symbol. All right, Main Street Cap Corp.
So yeah, Main is a new one for me, but the first thing that stands out is, again, you've got that 200-day moving average, and just the general rule of thumb from my experience is just you never want to, in this situation, go long that right there at that 200-day. What you want to look to do is let it break above it, pull back, hold, and then go long. So for this one, I would do nothing here. Just see if it can get any more momentum to power through that 200-day. But you can see that the last time it was up in here, you can see that 200-day was pretty decent support, and then it broke through, pushed back up, failed, and then had a pretty big move down. So just technically looking at this first time, this time up, you can see 1, 2, 3. Again, I would wait and do nothing, and if it gets above the 200-day and then it starts consolidating, holding, then it would look good for continuation move back to the upside. So the good thing is it's back above that 618 retracement, which was from, basically the swing high to low. So that technically looks good, but it's trapped right here with this major overhead moving average. So we just play it cautiously and let it see if it pulls back and starts, coiling, breaks that 200-day, and then, you can look to put on some kind of trade for an upside move, potentially back up.
This is a great example, Larry, where you and I are approaching the analysis with different techniques, but coming up with very, very similar conclusions. Yeah, interesting. Stephen B., Main Street Cap Corp.
Yeah, so I've never heard of this. And when I've never heard of a stock, what I typically do is see if there's enough participation, and people call that liquidity in the product to even consider something. So looking at it today, there were 220,000 shares and there were 52 options contracts. So I would never trade MAIN.
And there we have it, cut and dry.
Yeah, I mean, there's just no liquidity in any, whether you're buying, selling options, stocks, you're going to have to pay over the mid price to get filled on any position, and that's never worth it.
All right. And Stephen Place.
Hard pass. I got no edge here.
Okay. That's pretty quick. This is a good example. I worry about liquidity too, and I would look at the 10-day average volume. 200,000 is my absolute floor, and even then I'm hesitant. I like to get more, upwards of $500,000 or more. I don't mind, smaller cap stocks. Some of them can really explode, but 200 is that's a kind of a dangerous threshold there. In terms of a price pattern, though, I actually like it a lot, and my analysis is very similar to Larry's. And I see, if I'm looking back, to the beginning of 2016 when the uptrend began, there was a perfect. And when I talk about being an Elliott wave trader, this is exactly what I'm looking for. A big impulsive run, beautiful, ran from $26 to 42. It had a perfect correction down into the Fibonacci retracement zone for the whole run. So it got down to, between 38.2 and 61.8, about a 50% retracement. And now there's clear evidence of the continuation beginning. We got nice higher highs, higher lows. It's breaking above the Ichimoku cloud. We've got positive momentum. It is sticking right at the 200, so I would not take it until it definitively breaks that 200. I have no idea what just happened there. And if it were to break, I think it's going to have a nice price target. If I use Fibonacci extensions, project a wave 5 run up to 43 to 49 bucks. And if it can get through this 200, that's a pretty highly probable trade. So I would fret the liquidity, but the price pattern setup is actually pretty nice on it for me. Next up is CXO. That sounds familiar. I'm trying to remember what that is. Concho. All right. Got some Conchos on your belt there, Larry, for this one?
Yeah, I got some Conchos here. Yeah, so for Concho, let's see here. There we go. It's starting to move back above all the clusters of moving averages, so that's looking good. It's had a nice move back off these lows. It's a real kind of a loose, kind of whippy stock, so it's not one that I really kind of like when they're that kind of whippy up and down. But just from the overall pattern here and momentum starting to shift back up, this still has potential to move back up, probably back towards those highs of 163. But I think, for me, there would be better alternatives out there. But, just from the pattern and the technicals of it, it looks more prone for an upside move right now. So probably look to retest those upside highs.
Okay. While you were talking, I typed Whippy into Investopedia and it said, see Larry Gaines.
Whippy, yeah.
I like it. It's a great term. Stephen B., what do you got here at Concho?
Yeah, so this is another one that I've never kind of heard of. I mean, the setup looks pretty good. If it were me and I really wanted to do something in Concho, I mean, it does have over 1 million shares traded. The options volume is still very low, under 1,000 contracts a day. So I would look to find a similar stock that has more liquidity and maybe a little bit less gyrations, and I would maybe make a move in there, but I wouldn't do anything in CXO.
All right. Nothing.
Nothing.
All right. How about the other Steven? Something for you, man?
Sure. This is just in my experience, because CXO is an oil name. It's an energy name. Whenever I try to buy a breakout in an energy name, I get smoked. I don't know why. It just seems that the energy and oil services bucket has a much higher tendency to revert to the mean. And it's probably because it's tied a little bit more to oil, and oil is a commodity, and commodities have a higher odds of mean reversion. I don't think that this is the easiest setup in the market right now, just in terms of energy. I think ConocoPhillips is probably going to be the best trending kind of stock right now. I know, COP is a little bigger. It's not necessarily in the same industry, but those energy names they run on the same conveyor belt, right? So if I were looking at this in a vacuum and saying, okay, this looks like some kind of a potential breakout pattern, some kind of a potential continuation pattern, that's something I would consider. But it would be simpler for me if I were looking at this and knowing it's an energy company to say, wait for the stop run underneath $150. And then that's when you want to start considering a long entry, not right here.
Okay. And it's not the sector, Stephen. It's you, man. Just because you're paranoid doesn't mean they're not out to get you.
I know, right?
Yeah. It's pretty interesting. It was a fairly orderly market. I threw some Fibonacci levels on here. So it had a beautiful wave 3. It had a perfect retracement, and it ran up into the extension, right? My trade on this would have been as it broke the 200 at 129 back last fall. That would have been a good setup, a good entry for me, and we would have won. It would have gone into the target zone. Now it's already there, and it's, after having continued the original trend, now it's getting pretty sloppy, pretty whippy, and I wouldn't touch it at this point. No interest. I think there are some good energy plays out there, but this ain't the one for me. We've gone through 6. Let's pull back a minute, and I don't think we've had a ringing endorsement of any trade. We've offered some ideas about, if I did it, I'd do this, or wouldn't touch it. Why don't we each go around and share a trade that you actually do like, something that you are excited about, and maybe a current trade that folks could still participate in. So we'll let you lead us off there, Larry. And we're all taking notes. Larry's going to call it, man. I got my pen in my hand.
Yeah, so one that we kind of spotted today was Square, and this is one that just kind of missed it. Actually, a good entry, but this one looks pretty good. And this is earnings are past, and it had a pretty nice pop off. It kind of sideways, but this one was one to catch. Like yesterday, right in here. But I like the looks of this a lot. It's back above the moving averages. You can see it's kind of this rounded chart pattern here, and you're above the 618. So if this Square, I think, is one to watch for kind of if it consolidate hold here. This one looks good for a push back up potentially. The next target will be here, this 1272 from that high to low, but it looks good for a potential move back up to these prior highs. So some type of call spread, or maybe even a long call condor or something. But just I do like the looks of Square.
All right, they're a pretty interesting company. You cannot go to a small business, who does a new business, takes point of sale transactions. Man, they all got a Square device on their iPad or something, and they're a low cost challenger to the other merchant services. Absolutely, high quality, low cost. They're a pretty quality outfit. What do you like, Stephen B?
All right. So actually, EWW, which I didn't even know what it was until I just looked, because I looked at some of my scanners. So it's some iShares Mexico ETF. As we can see, it's at currently a 1-year low. Over the last 10 days, it's down 8%. Volatility is elevated. And we had a pretty big sell-off here in the last 14 days of about 15%. That being said, I'm a big counter trend trader. So this, to me, is an excellent position to get long EWW. So yesterday I sold some puts. Today I sold some puts. And I really like this position because everything's working against us to the downside. And I'm a counter trend trader.
All right, counter trend on EWW. Interesting. All right, Stephen Place, what do you like?
Sure. We'll go into some non-directional stuff later, but if we have time. But in terms of just think about this market, because everyone always complains that the market is in a mature trend and that it could top any day now, and so on and so on. Well, the question is, well, what about stocks that haven't been in mature trends and may have just ended a bear trend, went into an accumulation phase, and now starting uptrends? If you haven't been paying attention, and I haven't been paying attention, but I just noticed this last month, a lot of specialty retail and apparel stocks are incredibly hot right now, where they saw good moves on earnings and have consolidated over the past few months. A good example right now is Guess, right? The jeans. I mean, I haven't seen a pair of Guess jeans on someone since like high school, but you know, it had a big breakout on earnings. It consolidated. We've got a major bottoming process at 23. Just off the top of my head, some others to take a look at in terms of a theme. Abercrombie and Fitch, believe it or not, it's probably starting an emergent trend. You could look at something like Under Armour, which was trading at $11 just the other day, and it's now potentially starting some kind of accumulation phase. And you could look at some put spread sales or something along those lines. So keep an eye out on that area if you are looking to bottom fish in a market that hasn't seen any kind of selling to justify a bottom.
I actually like that setup. And here's one we're wrapping up, but I had to share it because it's a similar setup. This is a biopharma tandem diabetes care, but it's basically the same pattern you're talking about. This thing came down from over $40. Channeled at the bottom forever and broke out. We caught it at 503, and we're just getting ready to close it up here over pretty close to $9. Those things can go, man. Those setups can absolutely work, and it's good stuff. But that's too late to get into. My current trade that I like that I would share right now is EEM, the Emerging Markets ETF, and I am short EEM. And what's interesting is it was almost nearly perfectly correlated with the S&P 500 for years. And it just broke that correlation. And it just broke down into the 200 in a very definitive way, telling me we got a nice series of lower lows, lower highs, lower lows, lower highs. Under the cloud, it's under the 200 moving average. We got growing negative momentum. I got a retracement zone, a correction zone on this from 42.93 down to 37. And I think that's on. And the way we like to play that, given a strong directional trade, is just too far out in time. We're trading it with the September puts, just going along the puts. And I think we got the, what do we do? A contract. I like to go deep in the money, high delta, way out in time. So we got the September $49 puts. So again, we're pretty deep in the money, high delta. Let that baby run, get a few months out, close it up, take our profit, go home. So that's a good one for me. Okay, let's go ahead and get back to the list. Thanks, guys, for sharing your trade ideas there. And next up is the messiest chart I've seen all day, Bristol-Myers Squibb. What do you think, Larry?
Yeah, that's this thing has been really hit hard, as you can see. Obviously, it just got crushed to the downside, straight down. Now it's it's through that 618 to me is one of the key fib levels into the 786. You can see it's trying to kind of consolidate here. So this is one I would just be putting on my watch list to see if it can hold this consolidation phase and start to turn. So what you want it to do is you need it to start getting above. Like this is a short-term moving average, 8 moving exponential. So I'd want to watch this to see if it can start turning to get back above these moving averages, and then see if we can get some push. But it's not one that I would be chasing to do anything with, because if it starts to break this 50 here, then I could see it easily, dropping right back down to that 46 level. So this one, it'd be just a kind of a short-term trade. So if it on a momentum on a close basis started closing below that 50, I would take a shot to the short side. But I think there's a good chance that this could try to consolidate here and try to start pushing back up, because it's had such a huge move. So kind of a retracement reversion to some type of moving average would probably be in order.
Okay. You don't sound overly enthusiastic.
No, I think there are other better opportunities, but that's just my analysis of it. So
yeah, very good. All right, Mr. Brooks.
This kind of looks like the last one I just talked about. You're pretty oversold the last 10 days. You're oversold for the last 2 months. I'm sure the sentiment is quite negative. To me, it looks like a great entry point for a mean reversion play. So if I had to choose one, I would definitely choose something on the long side. I don't think I've ever traded BMY, but if I had to choose something, I think this is an excellent entry for a long trade for sure.
Okay, there we go. Our counter trend guy likes a long. Very good. Stephen Place.
I'll throw my hat in the counter trend ring here. So this one's a live by the study, die by the study kind of thing. That big drop that we saw back on the 16th, I believe it was a lung study along with Merck. That the lung study for Bristol-Myers said it helped, but it doesn't necessarily extend lifespan, right? So that's one of the reasons why it got hit so hard. It's not just the only biotech name that's getting shmammered, right? You can look at something like, I think Biogen, GILD, all of these names are getting hit pretty hard. And it's just kind of the cycle that we're in right now. I think that you can, if you are looking, because we're starting to see a lot of dividend names pop up on screeners for mean reversion, I think you can get away with selling some puts. Sell to open the June 50 put at $1.25. You get in at 125, you add it $2. You get a 2.5% return on capital, 5% return on margin if you have 50% margin. I think it's about 7% if you use portfolio margin. The stock has a 3.12% dividend. So this, I think, is a decent longer-term kind of setup if you are looking to enter in and scale into a dividend kind of name. Ideally, what you do here is you eventually work your basis down into the mid 45s, and you just hold on for the dividend. Okay, this is not necessarily a trade; it's a multi-month kind of setup.
All right, pretty interesting idea, and you get the extra points for preparing slides in advance of the show. Man, it looks good.
I do what I can.
Yeah, very nice. No trade for me. Just zero interest in BMY for me at this time. Nvidia. VDA. I think this one's interesting. But I'll wait my turn. So Larry, Nvidia.
Yeah, so Nvidia has had, everybody loves Nvidia, but it's had a fantastic move up headed into earnings. So we've got earnings, I guess, is on, I don't know if that's tomorrow, but I guess maybe before the open on the 10th. Not sure, but it's, my general rule of thumb is directionally, I would not take a trade, right a day or two before an earnings release. So, would not do anything here on Nvidia until after those earnings are released, and then see the direction. But directionally, it looks, pretty strong to the upside, and their earnings have usually been pretty good. But right here, I would not be putting on a new position. I'd have to wait to see what the earnings do, and go from there. I'd want to see the implied volatility. It might be one that you could maybe sell, way out of the money credit spread, call spread and put spreads to maybe cap some of that extended volatility increase. But right here, I would not be doing anything, a new trade to initiate it for a directional trade.
All right, no directional trade at this time. Stephen B.
Well, if people who are watching are long Nvidia, I'm not wishing that you lose money, but if by some reason Nvidia does sell off after earnings this week, I think that would be a great position to establish a long position, but I wouldn't do anything unless that happened.
Okay, to the point. And Mr. Place.
Yeah, earnings are up on deck. If you missed the move over the past 4 days, think about this theme. Large cap tech momentum name about a week before earnings, they often tend to have that kind of run. So look to add that kind of setup. If you do play stocks directionally, aggressively, look for that kind of setup you're going forward. But it's a no trade at this price at this time.
And that's where I'm at. You know, again, like I've said about a few, it's been a long, mature trend. You know, there's something different going on right now, by the way, that, you know, the sideways, pretty volatile sideways moves, about almost a 50-point move up and down, within a pretty well-defined range here on Nvidia. So I would definitely not be going long on this thing, even if it great earnings and it, you know, puts in a new high, wouldn't interest me. If it can break down below the 200, then there may be a short trade into a, you know, retracement zone, but that's not on the horizon at this time. So no trade for me on Nvidia. How are we doing on time? We got a few minutes left. I think we can bang out a few more here. Oh, look, we got McDonald's up. I'm actually in McDonald's, so I'll be able to talk about that. But Southern Company.
Well, this is one where you can see it's just, you know, it's already, you can say the horse is out of the gate on this one. I mean, if you know, here it broke down, and I would not be chasing it here to go short, and I would not be buying it long either until you see it come down into this support zone here and see if it holds. So this is, you know, definitely a no trade. It's just been huge momentum to the downside, but I think it could go a little further down into here to look for that support, and then, you know, here see if it consolidates. But I would be doing nothing on Southern right now.
Nothing on Southern. Okay, Stephen Brooks.
Well, it does have high implied volatility, which is nice. It did have a pretty big move today, which is nice. It's down almost 5% in the last 10 days, which is nice. A little bit lower, and I'd definitely be interested in maybe selling a put spread or a put. Not yet, though.
All right, maybe down at that previous low, right up above 43, 44 bucks.
Yeah, maybe
like
somewhere there, start to nibble.
Yeah. All right. Steve, place?
Yep. Southern Company is a utility. Utilities are incredibly rate sensitive. If you're getting long here, you're basically making a bet on rates. This sector, utilities, along with a lot of other high dividend names, have been absolutely poleaxed over the past few months, and they do warrant some attention for longer term portfolios. Right here, right now, I don't think Southern's a play, but I think that theme, especially as we head into the summer, is something to pay attention to.
Okay. I see a short-term short setup here. We got a nice impulsive move down, a perfect correction, and potentially taking out this low and going down to about 40 bucks. But that's a 10-point move, 10% move. For a directional trade, I'd want a bigger percent possibility. So I do see a setup, but I'm not going to be trading Southern. Not my thing. And then McDonald's is next, MCD. All right.
So we've got McDonald's here, and you can see it's been pretty whippy, choppy, but it's, you know, now technically starting to push back above these key moving averages. So here's that 200-day moving average again. You can see over the weekly time frame, it's back above all the major moving averages here. So McDonald's is starting to look decent for potential continuation back up. So if you put your Fibonacci levels in here, we could do that real quick. From that swing high to low, you're probably going to see this as close to 618 retracement. So this is looking pretty interesting here on McDonald's. Earnings are out of the way, momentum's up. So this would be more one to watch for a potential long setup on entry of, let's see here, just kind of look at the fib levels real quick. Yeah, so I'd let it push up here a little bit further, right into this zone here. Let it see it, get it clear this 618 right here and start holding 167, 167.5. And then this, I think, would look pretty good for an upside move. So it could just churn here and chop for a while, kind of trap between this kind of prior high 167.5 and this 200 days. So I would just kind of watch it here, see it churn, and see if that can continue up, and then look for an entry, you know, above this kind of 166.5, 167.
All right. Stephen B., McDonald's.
Fun fact, a Big Mac is my favorite meal on the entire planet. But with that being said, there's nothing for me to do right now in McDonald's. Maybe if it got closer to that high, I'd be interested in doing something, but not right now. It's very mid-range.
All right. Well, we'll count on you to go push the margin up a little bit.
I get 6 at a time.
That sounds like a challenge.
I'll do more than that.
Okay.
All right.
I've never had. I don't think I've ever actually had a Big Mac. I'm a Whataburger guy. It's a pass for me, by the way. I'm hungry. You know, I'm a fat kid, so it's a pass, and I need to go eat a burger now.
My little sister actually worked for Whataburger headquarters in San Antonio. It's I've never had one though, because that's a regional play.
Yeah, they're the best. What a burger.
Yeah.
Texas forever, Larry.
Yeah, they're the best. You got
I'm on
it.
the West Coast, man. You can't get a what a.
Oh, yeah, that's right.
McDonald's. Larry, we're pretty close in our analysis. I was actually long on McDonald's before earnings. I see a nice. We had a big run up. We had a perfect correction, and now we've got a continuation with targets up above 188 to 214. We got in a couple weeks before earnings. It drifted down. We scaled half our position off, gapped up on earnings. We're going to get back in with the rest of the position. Same level you were calling out, Larry. I think I'm a few ticks above. If we get up to and above this earnings gap up at 167.96, we're back in full boat and going to take this up to the target. That's I think it's looking good. We do need to break out of this consolidation, take out that earnings high, and then it's here we go to Ronald McDonald land, man. Wow, can you believe it? We've burned up an hour. Go ahead and let's wrap it up one more time around. And if you just got a thought you want to share, closing thought, a website, a link, something like that, go ahead and provide that, and we'll start winding it down. So, Larry, any closing thoughts from you?
Yeah, I always enjoy this a lot. I love looking at different trade setups. I like to kind of blindly, call something out and take a look at it just from a technical standpoint. So it's been a lot of fun. Appreciate you having me here again, Dean and David. And I'd like to say, come check us out at PowerCycle Trading. Here's our website. Just go to PowerCycleTrading.com. And we're doing a nice free webinar this Saturday. If you'd like to join us, just go here, click on it. So we're doing a directional webinar about kind of trading breakouts, et cetera. So check us out, PowerCycleTrading.com. And again, thank you very much for having me today.
Hey, thanks for being here, Larry. I like your cape on your picture there on the
You like
show.
that? Yeah. You just need some McDonald's Big Mac or something.
Little Hamburglar mask.
Yeah.
All right, Stephen, any closing thoughts for you, Stephen B?
Yeah, so there's two things. First is, when you're watching and you're listening to the traders talk, understand that everyone kind of has a little bit of a different philosophy. But the main thing that's important to understand is that while everyone has a philosophy, everyone kind of sticks to what they're used to and what they're comfortable with and doesn't really deviate a lot from that. It would be really easy for us to kind of come on here and just pick a direction to sound good on every single stock. But a lot of times we're saying, I'm going to hold. This isn't my style. I don't want to chase. So that's something to remember. If you're interested in chatting with me more, I'll hop on a phone call with you and we'll just talk markets. I totally love doing that. I've done that with other people who come on the show. I'm happy to do it with you too. Go to stephenbrooks.co/one-on and we'll just chat about markets. And thank you for David and Dean and Larry and the other Stephen for showing up. You guys are very helpful and I definitely learned a lot on this session.
Very good. Yeah, thanks for being here. That's cool. Have a one-on-one chat. Stephen Place, final closing thoughts.
Sure. Thanks for having me. This is always a blast. If you're watching this and you want these slides with all these trade setups, there were a handful we did not cover because we ran out of time again. Hit me up, Stephen@iwomail.com. Use trade setups in the subject line, and I will get this slide PDF to you shortly. So just hit me up there, and you'll have a great day.
All right. Very cool. Thanks, Stephen. Good to be here with you, too, and I appreciate your contributions. And again, I'm Dean Jenkins, followmetrades.com. Here's my website, followmetrades.com. Sorry about that. Flagship product is a stock and option picking service, advisory service. Our track record's here for the last several years. We provide complete details of every trade. You can click these green buttons and go see every single trade that makes up those results. We're also audited by a third-party CPA firm. That what we put up here on the website actually matches my brokerage statements. And we got a free newsletter if you want to get involved. Check it out. Every week I publish an update on the markets, on gold, and on oil. So that's it. FollowMeTrades.com. And thanks again to the panelists. It was great to be here with you guys. It was a fun discussion. I love looking at charts too. And I think we'll hand it back off to you, David.
All right, thanks, guys. For everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, be sure to join us next week for both shows. Crowd Forecast News will be, the next episode will be May 14th, Monday, 1 p.m. Eastern Time. And the next episode of this show, Analyze Your Trade, will be May 15th, Tuesday at 4:30 Eastern Time. And just want to thank my guests again for this week. Larry Gaines of PowerCycleTrading.com, Stephen Brooks of StephenBrooks.co, Stephen Place of InvestingWithOptions.com, and Dean Jenkins of FollowMeTrades.com. Thanks, guys.
All right, thanks.